Hi, today I'd like to follow up a little bit on my video from yesterday regarding Alibaba. I had pointed out that Alibaba has had some great revenue growth over the past year, and that for those of you who are interested in speculating with an individual stock here and there, that it was the type of company that in the past with that type of revenue growth has produced some very good returns when you get that type of growth, similar to Facebook over the past year or two, when we've watched Facebook go from down under $30 to above $120. So there's always risk with any individual stock, but when you get real strong revenue growth and earnings growth, those are the stocks that usually end up being profitable. But anyhow, what I've found helpful with the little bit of individual stock purchasing that I've done or helped my clients do is an approach where you take an initial partial position. So if you want to put $10,000 into an individual stock that you feel really good about, maybe you start off with $2,000 or $2,500, and if the stock goes straight up from where you bought it, that's not such a bad thing because you're making money right away. And yeah, you didn't get as many shares as you had planned, but you're making money, and that's the whole goal. And on the other hand, if the company you're interested in pulls back a little bit, that gives you flexibility where you can buy some more shares at a lower price and average your cost per share down. So as long as you're picking quality companies, you should be fine. I found that one really good source for determining whether a company is quality or not is Phil Town. He has a website, Rule 1 Investing. So if you Google Phil Town, Rule 1 Investing, within that website, he ranks companies, and he's a really successful investor, and I've found it to be a really good source. But with any individual stock, you need to go into it and realize you can lose a lot of money. You can lose all your money. You can end up, thinking you're doing the right thing, buying it at the beginning, and then you're down on the position, and you're frustrated. You don't know, geez, should I sell? Should I buy more? So you want to outline your plan beforehand. You want to know, okay, I'm going to buy it at $60 a share. I'll buy some more if it's $50. But then you want to have a point where you cut your losses. Maybe you say, okay, I'm going to sell, the shares that I bought at $60, I'm going to sell at $40 if it goes that low. If it continues to go down, then the shares that I bought at $50, I'm going to sell at $30. So that way you don't end up in a situation which so many people ended up in 2008, where they bought Citigroup and watched that go down 95%, and it's still down from $50 down to $5 still today. Adjusted for its 1 for 10 split, it's trading up around 47 or so, but it's really pre-split $5 a share, still not even. There are plenty of stocks like that, AIG, Fannie Mae, that just went down a ton and never came back. You can go to the oil companies the past few years. Lynn Energy Partners went from $36 down to under $1 within a couple of years when the price of oil dropped. So you want to be careful when you go into individual stocks. Realize you can lose a ton of money. And like I say, one approach that a lot of people take is to have a stop loss, but have a plan before you go in. Know what your tolerance is for loss, and use Phil Town Rule 1 Investing as a reference to make sure you're buying quality stocks. Okay, hope that's helpful. And feel free to comment, and I welcome you to subscribe anytime. Okay, thanks.